Hi, good evening. Today's Friday, September 10th. The news of the week was that Biden administration has mandated vaccination for all private businesses which have more than 100 employees. Obviously, it's a genius idea, especially in the time of labor shortages, when companies can't hire enough people. So now they have to deal with those mandates. Well, it's kind of amazing that our great free and democratic country, the beacon of freedom, you can't even work if you're not vaccinated. Unlike, like I mentioned last time, Putin, who is apparently a dictator, allows his own people to work without vaccines. So it makes you wonder, if Trump did this, I can imagine the media would be up in arms about Trump being a dictator, but Biden being a dictator apparently is okay. So, but, obviously people and businesses will find solutions. They will either fire a few people above 100, or they just could outsource them. Third-party companies, create shell corporations, break it down. So even if it gets to this, because I'm sure it will go to court, as other governors, obviously Republican governors, South Carolina, Florida, very unhappy with this ruling, with these mandates, and will definitely fight it. And just to add insult to injury, so to speak, Biden administration does not mandate migrants who come into US to have COVID vaccines. So not only the people who are actually working in US have to get the vaccine, they also have to subsidize the people who come to this country who do not want to get the vaccine. So, fairness that Democrats promise so much, science that we're supposed to believe in, where did it all go?
Because there was several hospitals in Northern Virginia where people who had American citizens who had life-threatening issues, they were being turned away by the hospitals there because these hospitals were being used for Afghan refugees, as we're calling them, and so we're sort of importing patients into these hospitals and
Right.
turning away, the people that are funding the hospitals.
And now the latest news, apparently a plane is in the air, or recently is in the air, have some refugees who have measles or memes, one of those things that they're not vaccinated against, so they're trying to decide what to do, if to stop an outbreak of some other infectious disease coming from those countries, which apparently they don't have to get vaccinated against.
Have hoof and mouth disease, or the dropsy, or these kinds of things you haven't heard of in
right.
Since Middle Ages.
And like I said many times before, if COVID vaccine is so great and it works so amazing and you're vaccinated, why do you care if I'm not? It makes no sense. Again, people who are vaccinated are afraid that people who are unvaccinated going to make them sick. So you don't believe that the vaccine works then? So why do you then take it? But if you believe that it works, why are you forcing it on other people? Nothing makes sense. And again, if people who already had COVID obviously have natural immunity, so why are you trying to vaccinate those people who already have natural immunity? Why is natural immunity not part of the vaccine passport if we believe in science? Until COVID, science was pretty clear. Natural immunity is protective. Now, apparently, only vaccines are protective and not natural immunity. So really, it's amazing. And like Jordan Peterson said, mandating vaccines is not going to increase trust. It's quite the opposite. It's basically an admission that trust has already failed, and now we're attempting to redress it by force. And so, the media continues to spread misinformation and reduces credibility even further. Just like one of the latest stories I'm sure you have heard about, ivermectin, which they said that people are overdosing on it and standing in line, that there is not enough medical staff to help gunshot victims. And that story was pushed by the Rolling Stones and ended up being 100% false. So, media just doesn't stop. They don't even bother checking. It's not that hard to call the hospital and check, do you have a line of gunshot wounded people and overdose on ivermectin? No, they just press misinformation and then they call it an update instead of a complete false story. So
the purpose of our media, I mean, and I don't just mean this isn't just a recent thing, but at least for since really the birth of the modern newspaper in the 19th century has been to spread narratives, not to tell news. If they happen to, if the narrative aligns with the news, they'll tell it as news. But if it doesn't, then they'll just either it'll get buried on page, 74 or whatever, or they'll just say, well, there's this like there's this curious problem that scientists haven't been able to figure out, and it'll be whatever it is that's outside the narrative.
Right.
It's called.
Never before has media been so brazen about lying as it is right now. They're really on par with the Soviet Union Pravda right now.
Right. Well, it's like there was a writer for the New York Times who I think has since retired, named Fox Butterfield, and his articles were very famously, like the headlines would like show, they like show the whole game that there was it was all a narrative. It would be like the headline would be something like crime rates keep falling despite the fact that there are record numbers of people in prison. Well, you'd think that there might be a relationship between, like the more people in prison, exactly, the lower the crime rate, right? But it would be like, well, wait, I can't figure this out. Like, why, how can there be?
Well, is there any surprise between the botched Afghanistan withdrawal, the mandatory forced vaccination that Biden lied yet again and promised we will never have mandates, and now here we are, we have mandates. So is there any surprise that Trump is now leading Biden in 2024 polling by 10 points? Massive gap. I mean, granted, it's very far out, but still, in all of that betting odds statistics, it's 10 points. It's a huge lead. I don't think it's large enough because given Biden's health condition, I think this is not a no-brainer, but
it's it's one of these weird moments in history where like the best we can really say, the best we could say is that we're not Australia.
Yeah, exactly. Yes, right.
We're not shooting our dog, the dogs in a shelter,
right?
So that people don't travel to the shelter. We don't have 9 p.m. curfew and so on.
Right. Well,
not yet. So
exactly, not yet. Right. Well, let's talk about Fed speakers. There has been a lot of Fed activity this week, and Williams apparently said that we have a long way to go back to maximum employment goals. So again, you read these headlines and you wonder, do those people even look at the data? We had some JOLT employment data came in this week that says that we have 2.3 million more job openings that there are unemployed people in US. Again, 2.3 more job openings than unemployed people. So if that is not being close to maximum employment, I don't know what is. If how do you even define then that 100% of the population working, this will never happen. So on top of this, in Beige book report that came up this week, they said that they have persistent and extensive labor shortages, and a number of districts reported an acceleration in waging, and wage growth is strong. On top of this, inflation data was, again, continues strong this week. Beige book reported that we have shortages of everything. Even at greatly increased prices, many businesses just cannot source key ingredients. And some businesses reported that they are having easier time to pass along cost increases at higher prices. And some businesses said that they will continue hiking their prices in the months ahead. So there is no sign of this transitory inflation transitioning to not being inflationary, given that shortages persist and the wage inflation is adding pressures to inflation numbers as well. And consequently, the PPI prices soared in August. They're up 9 months in a row and up 8.3% year over year. So clearly the companies will continue passing the prices along to the consumers, and so inflation transitory doesn't seem to have an end. So between the great employment numbers, job openings, and wage inflation, shortages, and inflation continuing, the Fed is most likely going to look at these data points as very strong and will be more hawkish and kind of ignore the Delta worries, I think. Well, we have CPI and retail sales coming next week, so we'll see how that plays out. But another interesting thing about the Fed this week was that a couple of speakers were actually actively trading stocks. And so now they sold them because of ethics concerns. Well, it's interesting that they didn't have concerns for all these years. So I wonder if somebody could just ask Jay Powell at the next press conference, what is his year-end target for S&P 500? Was he okay all this time with his Fed speakers trading stocks on a multi-billion portfolio? I mean, they could have put it in a blind trust or at least passive investment, but they are actually trading actively stocks. And some stocks that actually have to do a lot with rates. So they're actually trading on insider information. So everybody does, Congress does, Fed speakers do. Why don't we just make it legal and stop this charade?
Too bad we their trades can't be on the blockchain where we could see all of them going back to the beginning, and we could monitor all their transactions just as a as a matter of course. Why not? I mean, they're public figures, aren't they? Why shouldn't they? Why shouldn't all these things be public? They can have the same transparency that I already have with crypto trading.
Right. Well, they seem to sell their stocks right at the perfect time, because the market, S&P at least, had a 5-day selling 5-day red streak, the longest since February.
Yeah.
And today we closed down 31 points or so, and we're down around 100 points for the week, or roughly 2%. It's a slightly smaller correction than we expected last week, but 2% is still a correction, and I don't think we're done with this yet. We may have a little more as well to go. The seasonality is negative for the second half of September, but I don't expect it to break hard and fall yet, although 44.15 is the level that I would be watching. If that level breaks around 44.15, 44.10, then I would be a lot more cautious for the next few days as well. But down 5 days in a row, that's a rare occurrence, and we likely have some pullback. And 45.02 is the vol trigger level. That is the level that if we pull back to, could be a good place for a short trade to test some levels down below.
Yeah, I think that the options data is suggesting that around that 44.10, 44.11 area is pretty important, but that it could really, these vol is really blown out over the last several days, but so it could go down as low as say 43.90 or so. I don't know, kind of a plunge down, but then it would need to bounce back up above that level to keep the bull case alive.
Right. I wouldn't want it to close before 44.15 or 10, 44.10 or so. Like a short spike to flush out the stops, sure, but not a close below that level, because that would make the price section a little more negative.
Yeah, this is a really nice rollover, really, though, in the market. And I wouldn't be surprised to see these highs hold for a little while. I mean, by a little while, I mean weeks to maybe a month or so. I mean, I could see it. I mean, that this type of rollover is really pretty classic, and I think it might keep us kind of put a lot of overhead resistance in place for a little while. We'll eventually break it, but it might take a little time to get back up there.
To add to this point, we talked about Apple last week. I was saying that Epic Gaming company was suing them, and a large portion of Apple revenue comes from Apple Store sales. And actually 30% of each purchase made on App Store is what Apple takes, which I think it's a pretty high number. No surprise there that lots of companies are mad at Apple. 30% of the revenue for doing nothing, just simply putting the game on your App Store. It's a ridiculous amount. It really is a ripoff in my mind for sure, but and 70% of App Store revenue is actually from gaming stocks, apps. So gaming apps obviously unhappy about it, and Epic was the first one to sue them. And it was kind of like, I would say, a half-baked victory. So Apple, the judge said that Apple Store must allow third-party payments and can force developers to use an app purchase. But as far as how much Apple could charge, it's still a controversy, because judge said that Epic Games failed to prove that Apple is a monopolist, but they left that door kind of open for a possibility. So now I expect a lot more gaming companies are going to sue Apple. So services, which is what Apple app sales are for Apple, it's about 20% of Apple's revenue, but the margins are twice as high, or actually higher than twice as high for those purchases versus hardware. On hardware, Apple's margins are around 31%, but on App Store purchases on the services, the margin is about 66%. So a small reduction in revenue from sales it's a big reduction in margins for Apple, and consequently for EPS for Apple. So Apple was down around 5% this week since the top, I think Tuesday, and Apple was down 3% on the news today. So if this weakness in Apple continues into next week, that certainly is not going to help NASDAQ, because we know NASDAQ is what, the 5-7 big companies that a very large percentage of NASDAQ. Facebook was obviously offsetting and helping NASDAQ today, offsetting the losses from Apple. There were news on Facebook that invented some smart glasses. It's putting encrypted chat onto its WhatsApp app. So all of this helped Facebook a little bit, but then even that sold off at the end of the day. So another interesting thing for the week was that NASDAQ pretty much held up the whole week until today, as S&P was selling off. So that was a bit unusual that NASDAQ was able to hold off. So, but Facebook, as you could see, it's tripled since the pandemic low, almost tripled, not quite, but pretty much close up there. So again, how much juice is left in those stocks with ending of the free money for people, and as well as like I said, the Apple revenue is now threatened. Can NASDAQ sustain this and go up next week? I don't know. I think it's, if we look at NASDAQ chart, 15,000 is something that the odds are we may revisit.
Well, what I think is interesting is the continued strength in some of the cyclical stocks. Like you look at Alcoa, broke to 3-year highs today, and U.S. Steel. These stocks have been weak for a long time, and they've really been strong since the March 2020 low, and they were market leaders today. I mean, Alcoa up over 4% today. Then some like CF, which is a nitrogen fertilizer company. I haven't really watched the fertilizer companies in years. I mean, it was like 2010, the last time they were fun stocks to trade or something. But there's other some interesting pockets of strength that are in some of these areas, like the cyclicals, for example, that it's just interesting to see. And of course, some of the meme stocks like the AMC and so on showed some resilience this last week. It was really interesting to see just how strong they were, counter market, right? And we'll see if that can hold. But there's just some of these pockets of strength in some of the meme stocks. I mean, that's a little bit of they're always going to move on their own in a time and direction, but it's interesting to see where there is strength. That we may be seeing a little bit of what I've been thinking for a while is a change in leadership in the market, away from the big tech to some other stocks. But
yeah, well, it was certainly an interesting week in crypto land this week.
Essentially what we saw was this week was a reversal basically of last week. And so we saw this run up in Bitcoin, which might have been because of the perception of the adoption that might be driven by El Salvador's adoption of it. I think also it's been underperforming other crypto for a while, and some of it was just a catching up. But then it's like Bitcoin still the biggest by far, and when it decides to reverse, it's going to bring everything with it, and I think that's what we saw. So it dropped back below what I consider to be on a significant level, which is the 200-day moving average, and then it's right now just a bit below the 50-day, and so I think these are significant levels, and it's worth watching the weekly close in these. I think a lot of traders will be watching that, which is tomorrow at 8 p.m. Eastern time. But if it can rally back above this level, then it's I'd say really the 50-day might be more significant at this point than the 200, but I think both of them matter. It's not fatal if it doesn't, but it just makes it a little bit more cloudy.
What's interesting about this drop is not that it dropped, but how precipitously it did. It dropped 10,000 Bitcoin points in 3 minutes, or 5% in a single minute. So those kind of numbers, I would say, were not necessarily good timing, especially for El Salvador adoption, as people are trying to get used to Bitcoin as something new, and all of a sudden it drops 5% in 1 minute. It's just.
Well, let me to talk about that. I mean, realize that the people there are people that have become have gained a lot of wealth in a matter of a decade, if they were very early, or less than that if they were just early. And so there are some people who become, let's say, powerful or influential or whatever. They have some money now that are in the crypto space. But the people, there are far more influential and powerful and wealthy people outside. And they were the people that were influencing the ridiculous discussion in the Senate, where they held up taking a non-combative stance toward a new asset class. It was all supposedly held up because of what's his name, Dick Shelby, bringing up his defense thing at the last minute, which was totally concocted and contrived. It was not like this sincere conviction of a man who's lifetime in the Senate or whatever. It was nothing like that. It was nothing innocent like that. It was purely contrived. And I'm not being conspiratorial, but there's, like FDR said, there are no accidents in politics. There are no like happenstances. It was on purpose. Everything that's in the Senate is like kabuki theater. It's very much, staged, and there's nothing that just happens accidentally. So that was all on purpose. They're very powerful people that want to, they might not believe they can stop crypto, and they might not even want to, but they want to slow it down. And they do not want it to threaten their moat in the financial system too much. So they want to slow it down. So in my view, it's these types of things, and they could be major banks. It could be just individuals that are managing hedge funds and so on. They don't want to see this race out of their. I don't want to say they want to accumulate, but they don't want it to threaten their livelihood, is what it comes down to. And so yes, they're behind the Senate moving the way that it did a month or so ago. They're behind the so-called grassroots protests in El Salvador. I mean, anytime you see a grassroots protest in Latin America over anything, you can be sure that there's some major forces behind that, because there's these like the way coalition politics work there. If you organize, it's like done through unions and different groups. It's not just like people showing up for a rally like might happen in the United States. It's a lot more astroturfed than it is even in the United States. So I would just say, that was a little bit of a rant, but I guess my view is that, some of this is, it was a little bit of pump and dump hype, and but a move of 5% or 8% or 10% in crypto it's not unusual at all, and it's very typical. And I would even suggest that, I mean, if you look at history over any time period, look at it over 2 years, a daily move like what we had, not unusual at all in percentage terms. So it's just the nature of the beast. And so I don't think it wasn't anything that really concerned me. It was more like, well, we had this big race up, and here we are at a level that's a bit below what I consider to be a bullish level, but it's just, it's maybe 3-4% down from where it was a week and a half ago. Ether is a little bit of a more bullish story, I think, right now. It has been for a while, and it's right now sitting right on its support resistance line, which is, in my view, at 3,200. And it jogged around that line, and then it actually followed Bitcoin in the rally. Bitcoin rallied first, it rallied second, and then a lot of other things like Cardano and so on. Cardano rallied before, but there's some reasons for that. But there's some of these others, some of the other minor ones, or I wouldn't say minor anymore. Some of these have grown, like say Solana. And so this was a necessary correction in that. And so there's a feedback mechanism. And when something like this cracks, tops, has a blow off and cracks, it spills back into Bitcoin, it spills back into Ethereum. And I think that's what part of what happened is that there's no way that, no reason for this to rally as much as it did. maybe 100%, maybe it was undervalued hugely, but this huge move from late July was 23 up to over 200, a 9x move. That's wasn't justified by the fundamentals, but it so some of that was
What does this company do?
well, Solana is a competitor to Ethereum. It's a smart contract platform, and it's a competitor. And my take on it would be that they have some interesting technological ideas. It's not horrible or bad. I mean, I'm not going to say that about anything really. If somebody's trying something, but I think my view on Solana is that it's a Silicon Valley entry in this space. Okay, a lot of the people that, it's not to say that they weren't Silicon Valley people, like Coinbase itself was based in San Francisco and got a huge number of programmers, developers from Silicon Valley, and had funding from all of those people. So it's not like it's separate and truly, but then all of these were like Bitcoin, and then Ethereum, and even ones like let's say Avalanche or Algorand and so on. All of these were founded by people that were or Cardano, people that were what I would call crypto native. In other words, they were around from the beginning of Bitcoin, around from the beginning of Ethereum, and maybe it was a little bit of greed, a little bit of ambition or whatever that drove them to start their own competitor, but they had a lot of history in this space. Whereas Solana is kind of, even though the face of Solana is Sam Bankman-Fried, who has been around crypto for a while, it really is a product of a lot of VC money deciding, hey, how can we cash in on this trend? And so I call it a VC coin, because it's really driven by VCs, venture capitalists, wanting to cash in on this trend and make money. But it's very, in my view, comparing it to something like Ethereum, or even some like Avalanche or something that are Ethereum competitors, it's very centralized in terms of how it's managed, how it's run. And then also the percent ownership is very concentrated among a handful of venture capital funds compared to Ethereum, which you could say all of them are concentrated, but there's nothing compared to the Solana, the concentration for Solana. So I think it's there's reasons why people are using it. As like fees are cheap compared to Ethereum, which because it's like the old Yogi Berra joke about he dismissed going to a restaurant as it's so crowded that nobody goes there anymore, right? And it's kind of, that's the problem with Ethereum. It's so crowded that people are looking for some of these alternatives because the fees are high. But why are the fees high? The fees are high because it's where the action is, and Ethereum is in the process of making changes that will lower those fees hugely, but it's not there yet, and not quite there yet. And so it's that bottleneck is giving an entry to some of these like Solana a door for them to go through, a door of opportunity. But I think that in the end, what the real question is for something like Solana is, it's not, oh, is this going to take over Ethereum? I think no. I think that it's what is its rank, or what is its, where will it fit in the order of things as things settle down a bit. This price rise wasn't sustainable, but there'll be a place for it. There will be people that don't care that much about decentralization. They just want cheap fees. They don't care about the concentration and these types of things. Whereas there are other people that will care a lot about those things, and they won't invest very much in Solana. So that's it's not bad. I mean, they have some interesting technical ideas that they can be easily copied by the others, by the competitors to Solana too, if they're really good ideas and they work. So I think it's interesting to watch. Solana has gone from we can look at the ranking. It's gone from that huge move of something like 9x in 2 months, has now pushed it up to number 6, and the rank based on market cap. So it's now a $51 billion platform, okay? Up basically 9 times. So it was a $5 billion platform at the end of July, and now 51 billion. But some of these others, I mean, what's really happening is it's competing more with Binance and Cardano and so on than it is with Ethereum in the strict sense. So that's where it's eating their lunch more than it is Ethereum's, in my view. So it's but it's fascinating to watch, and that's kind of one of the it's one of these characteristics of the crypto market, where there's these kind of rises and falls. I mean, we saw that a little bit in Algorand this last week. We saw a huge rise because there was a rumor that there's a company that's based in El Salvador that they released some kind of press statement that they had very successful talks with the El Salvador government about adopting this Algorand, and it's kind of a competitor to Ethereum in a sense, and a smart contract platform. And so Bitcoin, the weakness of it is it doesn't have smart contracts native to it, whereas of course Ethereum was the first smart contract platform, and all of these are competitors of that in the smart contract space. So but this rose pretty significantly from its place in July. Was you're down here at 73 cents, 74 cents, and now it rose as high as $2.50. And now it has a market cap of, what's this market cap? It's about 10 billion. So it's still smaller. But
when I look at all of these additional coins besides Bitcoin and Ethereum, it all is very much reminiscent of the dot-com bubble to me. Even Bitcoin itself, the 20% move in 3 minutes, it's just the speed and the volatility of this move. It certainly doesn't inspire confidence for Ecuadorian people and El Salvadorian people when they're looking at their Bitcoin wallets and the amount drops in dollar terms, 20%, so rapidly.
But why? I guess my question would be, okay, I don't think it's quite fair to compare it to equities, because they're not equities and they're not on centralized exchanges. There's hundreds of exchanges that are trading Bitcoin, and none of them, there's not like some centralized order processing system. Part of what you see is part of what happens in crypto is that there will be like a big seller that will come in at one exchange, and then they'll move the market on that one exchange. And then there will be all these arbitrageurs that will then shift the price on other exchanges, and it cascades to some degree. And whereas in the stock market, there's one New York Stock Exchange. And yes, a stock might trade on Berlin Exchange or.
But even in dot-com bubble, stocks were moving 20% a day or whatever, and there were proliferation of various internet companies, which all promised to be the future, and only a few of them survived. So that doesn't mean, I'm not saying that crypto is a complete like fraud or anything. I'm just saying that it reminds me that there are all of these companies that are moving like the stocks in the dot-com bubble, and which ones survive, it's we will see which ones of them survive and what's the valuation is. But those moves like in Solana or in Cardano, where they're trying to compete with Ethereum, which one wins? I mean, just the magnitude of those moves reminds me that time. And plus the NFTs, all the hype that's going around NFTs, and now we have NFTs of NFTs, fractional NFTs, all of that stuff. The 4 billion just this month alone in OpenSea, when 2 months it was barely 500 million. So it's just, there's so much hype around this space, so that not surprising that this volatility is so high.
Of course. I mean, and I agree that some of this, I mean, there's a lot of froth in this, and that's part of what's going on. I mean, something like a Solana, you can't have a move like that. And I mean, this doesn't happen in a bear market, right? And it's only in a big rally bull market. But on the other hand, you've got and maybe .com is a decent example in the sense that not everything was bad or a bubble or worthless. You know, there were the hotjobs.com and socks.com or pets.com and so on that were just more or less worthless, Lycos and so on. But then there were the Amazons and the Yahoos, Yahoos were, stupid now, but Amazons and so on that were rising at that time. And there were people that dismissed Amazon as being worthless in a bubble and so on. And it was as late as 2011, Amazon was trading at like something like $190 a share, because there were doubts about whether their business could keep growing. And
right, and it's like Dogecoin. It's still trading a lot, and
well, I know that it's unlike, I mean, look, this is where what it comes down to, that look at Ethereum and the fact that in this recent rally it came close. It did briefly pop above 4,000, so it came close to making a new high, right? It came close to its old highs of May, whereas Dogecoin isn't anywhere close.
Right.
It's been broken, and everything since then has just been a slide down, pretty much, with a few pops. But I mean,
it's still doubled. It's not just, it's pretty much 100% since the almost.
But you've had all these celebrities pump it and so on. I mean, if that were happening in the stock market, then you'd have the same thing. And
yeah, sure.
I'm just saying it's a totally different person that's buying Dogecoin than is buying Ethereum generally. Well, I'm not saying there's zero, or Bitcoin. I'm not saying there's zero overlap, but the overlap is small. The people that find something like Dogecoin attractive. I mean, Dogecoin was first when it first came out in 2014, it was intended to make fun of cryptocurrency itself. It was mocking the idea of cryptocurrency, and the people that started it, they're not even around anymore. They've moved to other things, and they don't even care about this anymore. But they.
But even in Bitcoin, there are, like you call the maximalists. For example, I just shared the tweet from Elizabeth Warren, who's still harping about. The climate.
But how can she? How is a senator who's never had a real job in her whole life, able to assess what economic value. I mean, there are people that work for these companies.
Right, which is fine, but the point is,
they employ more people than Elizabeth Warren has her whole life.
right, it's not even about what she's saying. It's as much about, I just wanted to put it in a context. It's about the Michael Saylor's reply, which is, to me, completely off the wall reply. He said that Bitcoin mining converts wasted and stranded energy into digital energy, the natural successor to chemical and electrical energy. It can be managed by any computer, transferred anywhere at the speed of light, and lasts forever, thereby improving our climate, economy, and power grid. Okay, this is a bit loaded. And I mean, digital energy, what is it? Lasts forever? Really? I mean, are the laws of physics have been suspended for Michael Saylor, for Bitcoin? How do we even unpack this whole statement? And that's what I mean. People like that, like Michael Saylor, now he sounds like a snake oil salesman to me. Obviously, Bitcoin has users, etc. We discussed this before, but saying that it's some sort of magical energy converter that's going to save the planet, it's a step too far, a little bit.
Well, in every, what you say, I mean, yeah, there are always these types of people that just, they invoke some kind of mystical, energies and vibrations of the universe and things like that. And I think Michael Saylor, the one thing, like he's very much a Bitcoin maximalist. And by Bitcoin maximalist, I mean someone who, that not only do they see Bitcoin as the only legitimate cryptocurrency, but they see everything else as a threat and a corruption of the idea of cryptocurrency, and that nobody else who's doing anything else has a good idea. Well, Vitalik Buterin was 100% a Bitcoin guy at one point, and he brought forward the idea of, here's how we can put smart contracts on Bitcoin, and the Bitcoin community rejected that idea. So he said, well, okay, I'll just do my own. And that's what happened. That's how Ethereum came to be. And although we're now at a stage of market evolution where you've got these Solanas and some of these others where it's just a cash grab, basically, in my view. There's still a lot of people that are driven by ideas for making things better. They really want to improve, have better financial system. They really want to have a better cryptocurrency even, and they're driven by that passion, those ideas. It's very different than Michael Saylor, who he wasn't coding the Bitcoin's script language or anything. He's just an investor in this, and he's a latecomer and an investor in this, and he's a believer, but he's got I think
it's almost like a religious cult at this point with some of these people.
Well, but it's such a minority. I mean, if you talk with someone, of course, like, if you were,
they're just very vocal.
Yeah, if you were to talk with, let's say, well, I mean, look at another very early investor in Bitcoin and someone who is still a big holder and is not an Ethereum guy at all, is someone like Peter Thiel. And would he talk like that at all? No. He talked more like an investor or a businessman in a way that people on Wall Street would be very comfortable with. But Saylor is a CEO of a public company that he founded, and so and it's a pretty decent sized company. So when he says something, it's going to be reported, right? And he's got hundreds of thousands of followers on Twitter. So it's like he's got this. Okay, so the viewpoint is referred to as hyper Bitcoinization. Okay. The idea that, and this is put forward by someone in a book called The Bitcoin Standard by, his name is Saifedean Ammous, and he this intelligent guy. But he's again a Bitcoin maximalist, and his contention is that all of the fiat currencies of the world are going to collapse, and countries will be forced to adopt Bitcoin as their only monetary standard. And there will be, everything will either be, if there are dollars left, they will all be tied to Bitcoin, fixed, exchange rate with Bitcoin, like gold was in Bretton Woods too. And I just think that's ridiculous. I mean, you look at what the money machine that exists in developed countries, the central bankers will do whatever they can to keep this going. They think they can rescue the economy from a pandemic that they have imposed upon us. I don't mean they're making up the pandemic. I mean that they've imposed all these economic restrictions on us. And then they also think they have the cure to the evils that they've introduced into the system, right? Are they going to give up this kind of arbitrariness and this power? No, they will never give it up. They will always assert that they have this privilege and this,
and if they do accept Bitcoin, it means it has been corrupted to the point of not being recognizable. And so
perhaps so, that's a different issue. That may be down the line, but I would say that people like Ammous or Saylor would see something like El Salvador as being complete vindication of their beliefs, that, oh, this is just the first domino and it's all the other dominoes are going to fall. But I see it more like there might be some other countries that do this, and it's a little bit of a it's less than they think. Okay, and what I mean by that is it's a sincere attempt to attract the crypto kind of development money that companies that are serious about developing in this space might say, well, let's have an office in El Salvador. Let's hire some programmers there. The country is really friendly to this. They're not like the United States where they want to shut everything down, and or China or whatever. And
China was friendly at some point too. So there is always a risk from the government. El Salvador is friendly now. What happens in a year, nobody knows. It's a dictatorship regime anyway. So
I think that that country, a small country like El Salvador, I think they'll find that it will bring them a fair amount of money because there will be investors that invest in a space there, and then it will be a key industry, a key small industry there that will employ enough people that they'll keep it going. And why not? And they're not like it's not like the U.S. is throwing tons of aid into Latin America anymore anyway, or that we can even. And so there will be other countries that do this, and they'll tend to be the small countries like in El Salvador. There might be a few others in Latin America that do this, because you look at it in El Salvador where they're basically on a dollar standard. And it's the worst of all cases for if you're a small country and you don't necessarily have the best relationship with the United States and you're forced to use dollars, because then in order to increase the size of your economy, you have to export more goods to the United States. But because that's the only way more dollars are going to flow in, right? And everything's based on.
But the question is why couldn't they have their own currency? Their own
They did, but they had a currency crisis.
Exactly.
And so that's the thing about it's sort of the idea that Bitcoin can be, kind of a buttress to their monetary system, which I don't know. I mean, I think that it will be interesting to see, but I do think it could help position certain countries as being kind of little pockets of where there's some interesting and lower cost development. I mean, like Switzerland and Singapore are very famously crypto friendly. And there are many, many companies. There's what's called Crypto Valley, which is around Zug, Switzerland. And many, many companies are based there. The Ethereum Foundation itself is based in Zug. And there's others in Singapore. But it's extremely expensive to hire programmers and marketers and so on in Switzerland and Singapore. I mean, you're paying top dollar. And housing prices are high. I mean, everything's expensive there. And you can't just become a Swiss citizen very easily unless you marry somebody that's Swiss or, things like that. Singapore is a little easier. But Latin America, they want investors there. I think that I think that they're aiming for something a little bit different than what might be people might be thinking. They're thinking more of the economic development spillover effect from making El Salvador or some other country a crypto friendly country, and
Right.
and I think it's a smart move, actually.
Oh, in that respect, I absolutely agree. It's not that, but people think that somehow Bitcoin is going to save El Salvador simply by using Bitcoin instead of the dollar, which is absurd. But yes, by bringing in investment opportunities into the country, absolutely is a great idea.
Yeah, it's kind of like they're distinguishing themselves by being just a little better than some other country, and it's like a little bit of it's amazing what a little bit of FDI, foreign direct investment, can do for a small country.
And people forget the dictatorship aspect of El Salvador rather quickly too. Nobody cares now about this, even though he tightened up some other screws a couple of weeks ago. The Bitcoin news overshadow that.
Well, that's the I think the idea that you hear from some U.S. commentators that, well, this is just money laundering, blah blah. I mean, you talk about money laundering. I mean, $100 bills or $500 euro notes are the favorite of money launderers, not Bitcoin. I mean, why would you? Yeah, like I said at the beginning of this show, hey, let's force all of the senators to put their trades on the blockchain where we can all see them, like you can for any single user of crypto. And no,
you can, but you don't know. You could trace it to a wallet, but not to an actual physical person.
It's not anonymous though; it's pseudonymous. And so you may.
But if it was not completely anonymous, we would have known who caused that crash of 10,000 Bitcoins in 2 minutes or whatever. 10 minutes.
Well, they're like I said, there are people that don't want the adoption of Bitcoin.
Right, but I'm saying we can't exactly trace it to a particular person. It's still somewhat anonymous.
There are firms that claim that they can pretty much get it down to the individual. And one of them is based in New York City called Chainalysis. There are others, and that's what they do. I mean, the thing that normally obscures it for a lot of people is there are two things that can obscure that. And the one is that if people had Bitcoin from the very, very beginning, then they might have gotten there's no, it's been truly air gapped away from them, like never tied to their bank account through a Coinbase account or something like that. It's like they wired money to, whatever his name was, Karpelis, back in the early days, and got 6,000 Bitcoin wired it or sent to them directly to a fresh wallet, and they've never taken anything out of that wallet. And there are some people like that. There will be those, but those are generally not that's not anybody that's using it for money laundering. These people might be evading the law to some extent, but are they really, money laundering? The people that are using it for like criminal activities and they need to launder money, they're turning over their assets fairly rapidly. They might use something like
NFTs. They could use NFTs for money laundering easily. Buy, sell.
But that's true of the art world, and that's exactly why, when you see, like, for example, Hunter Biden auctioned these works of art, which were pretty mediocre, for hundreds of thousands or millions of dollars, and the buyers were completely kept private and not disclosed, and that evidently is something that actually is common in the art world. And there will be these big auctions, $12 million for a Chagall painting or something, and it'll where does money come from? Where does it go to? I mean, maybe it's really worth 3 million or 1 million, but the other 11 million is some kind of a transaction that's evading the law to some extent. It's illegal money that's being laundered, and I think that's very common in the art world. NFTs are just an online version of that.
Yeah,
and it's not anything new. I think the art world's been a money laundering tool for a long time, very long time. Right. Ever since these big prices started happening back in the 60s, 1960s, I think is when that really happened. It's been money laundering since then. But I think that, I think the Saylors, they're sort of, I mean, they're kind of like, there were people that had a similar kind of this like millenarian like view, this view of like, we're in this new economy. They called it back in the .com era, the new economy. All the old rules have been thrown out. We can't, we don't have to worry about revenues and profits anymore. It's like clicks and eyeballs and this type of thing. And it's the same kind of thing to some extent with crypto, but there really is, despite all of the like the hype around it, there really is a huge amount of value being added in things like decentralized finance and so on, where there's a whole set of products that have emerged, financial products that are basically enable ordinary people with modest means to do things that hedge funds do for very wealthy clients, but do it with relatively low friction and not the high barriers to entry. So people can engage in fairly complex hedging strategies or be a market maker for markets and make the profit from just trading activity and so on. These types of things that big money managers are doing, it enables ordinary people.
Well, didn't Coinbase get into trouble from SEC this week, or
yes,
because of that exactly? They
wanted not really. Okay, that the SEC threatened to sue them if they launched their what they call Coinbase Lend. Okay, but this is nothing different from what and I'll name a couple of platforms that are very similar to Coinbase, and they're centralized. They're not like decentralized platforms or anything. BlockFi and Celsius, they both offer interest on crypto. Like I have an account at Celsius. You deposit some Bitcoin or some Ether, and they'll pay you 4 or 5% interest on that. Well, where are they getting that interest? Okay, a couple things. One, they're doing DeFi with that money. They'll take the crypto, they'll put it in the DeFi platforms, and they'll make 1 or 2% on the on a profit from that. or revenue, I guess, but they'll pay you 5%. They're making 9%. You know, their expenses cost 2%. They're keeping 2% for themselves, and so that's part of it. But you don't. You're not having to move the money around, and it's also insured if you're on a Celsius. The second thing they're doing is they're lending that crypto to big firms that want to engage in shorting or something else, and so they're lending it and they're paying that. Well, so Coinbase wanted to do the same thing. Their lend program would have been, you lend them crypto and they will pay you interest on it. And so the thing that makes it really questionable, that Coinbase would come under SEC purview for this, or this would be a security, is Coinbase is actually registered in the States as a bank. It's considered a bank. Banks are not subject to SEC regulation. Like if you go down to your bank and you deposit money, that savings account or whatever is not regulated by the SEC. It's regulated by other entities, right, that are banking regulators. So Coinbase should come under it. What my interpretation of what the SEC is doing right now is they're asserting authority over this whole space. And already you heard there was someone from the CFTC, Commodity Futures Trading Commission, saying this isn't a security. This comes under purview of the CFTC. And so it's like there's this little kind of headbutting between these different regulatory agencies as to who has authority over this.
Well, they see a cash cow and they're arguing who's going to milk it, obviously.
Well, I think what will happen is, and Coinbase has been, so Brian Armstrong, the CEO of Coinbase, I mean, none of this would have been known had he not tweeted all of this a few days ago, right? So he tweeted it out, and I think he's got the most people that are involved in crypto are pretty much behind him. That why should this be? They were willing to work with the SEC. The SEC said our door is open, come to us and talk, and they did, and yet they get this kind of nasty letter, like, wait, we thought we were talking with you, we thought we were coming to you, and with open arms and all that, and so.
But the response of Max Keiser, did you see that response? Another Bitcoin maximalist, Max Keiser. He responded to the CEO of Coinbase saying, and I quote, "You sell shit coins. You should be shut down as an unlicensed casino."
Yeah. So see, that's that right. To me, it's like it shows the in the bad faith of a lot of the Bitcoin maximalists, right? That they're either like the Michael Saylor, or this kind of this sunset look in their eyes, and they're putting on the black tennis shoes already for the great mothership arrival or whatever. And then you've got people like Max Keiser, who despises any kind of innovation in the space, to the extent that Coinbase, which has done more than any other single company in the world to spur adoption of cryptocurrency, he takes a combative view toward them. That makes no sense at all. They've done more for Bitcoin than any single company in the world. And I don't know. I mean, it's just ridiculous for that type of thing to happen. But I think that most people involved in the space are behind Coinbase on this, or they dislike what this kind of threat attitude. And I actually think that they have a good case to make in court, that because they have attempted to negotiate these issues in good faith, and the SEC appears to be operating from a place of bad faith, which is not that makes that weakens our case largely. So I think we'll see Coinbase actually take some legal action. And the other thing is that there have been a number of big fundings of political action committees on the part of crypto over the past few months. I think there are already a lot of lobbyists and so on, but it's nothing like what it should be or what other industries have. And that has all emerged in the last month. And I think that if anything were to go before Congress or even and so on, I think there's going to be a very different response than what happened. And it'll be a lot more effective than what happened back in August.
Right. Another interesting, just a fun observation from last week about Bitcoin and Ethereum. Rese Weatherspoon, we talked about it. She's the one who was so excited about Ethereum. And that again was basically a couple of days before this sort of large sell-off. Just like Tom Brady with the laser eyes last time around. So it's
she bought the top, didn't she?
Right.
I would say though, I wouldn't call her, that she's built quite an empire from my understanding. I mean, she's sort of like maybe not the extent of an Oprah Winfrey or something, but she's been a very successful executive producer and funder of different projects and companies and so on. So I'm not sure I'd underestimate her in the long term. It's not like I want all the celebrities on my side when it comes to investments. On the other hand, there are clearly some that are smarter than others. She's not one of the dumber ones, I would say. When it was
it's just a funny coincidence when all this hype, including endless NFT talk and her in addition and all that. So that's kind of.
I think Stephen Curry buying a Bored Ape,
right, and that
$300,000 or whatever that was, that was more of a contrary indicator than some other things. That was a pretty bad sign. Or Visa buying a CryptoPunk, those are signs that where it's like people that aren't, when it's people that aren't really involved in this space decide
right.
They have to get involved, and they get involved in the most hyped up manic part of it. That's kind of it's a warning sign, but I don't think we've seen the top yet. So this is the Ethereum chart, and I think that the important level for Ethereum is or Ether is right at 3,200, and so we're right under that level. And unlike Bitcoin, it might be a little bit more bearish right now. It's at 44,550, which is below both its 50 and 200-day moving averages. Not that much below, but it's below, which is I think negative. Ethereum's like sitting right on this level. So I could see it. It could break through. I mean, it could break down and travel again in this level. I think though that this it really needed to. I'm glad to have seen it pull back. What I was saying last week is that I would not be surprised at all to see a trade between this 3,200 and 3,500 level for a while, because it spent no time in this range. And if you look back here, I mean, it's like literally just a matter of days. And so I would like to see it trade around, kind of jog around this range for a while before it attempts and kind of move up. So I'm not, I mean, as a someone with a longer term target, I'm not bothered by this move pullback. I would have been more bothered by a continued move up and hitting new highs. And I think it'd have a good chance of a blow off if that happened. I don't think we saw anything like a blow off. It was topping, but not a blow off. And the same with Bitcoin. It topped out, but it didn't really like blow off. And so I think I'm actually glad to see this. But so there's a website that tracks what's called the price floor for Apes NFTs, and I think this can be worth watching if you're interested in. I mean, I'm not invested in any of these things, but it can be worth watching because they. I'm not sure if they have. Yeah, they do have charts. So let's see. This is.
What's the most expensive one there?
Well, it's CryptoPunks. I mean, that's the one. I mean, these were being sold for like like 0.1 Ether back when Ether was $200, $300 per Ether. And then at the beginning of 2018, and so the most expensive, you can't buy one of these for less than, right now it's 84 Ether, which is $269,000. And the most expensive one that's listed, well, you've got people, putting crazy amounts here, but I would say like, the median price might be, like about 150 or something like that. But you can get one for 84, which it's still, it's a lot of money. So
some of them look identical, yet priced differently.
Well, that's the idea. I mean, it's like it's a status good. Okay, it's like saying that I was around from the beginning, is what it's saying. Or I have.
But why? How come some are more expensive than others? Like this.
What's that now?
Like there's this dude, which look exactly like this dude.
Right. Well, there's only 10,000 of them, and there will only ever be 10,000 of them, and they simply aren't. There's no more being created, and yes, the idea of them was a somewhat comic, throwback to 1980s style 8-bit video game graphics. Right, is what it was a reference to, like kind of like Minecraft, where people they like the fact that it had this kind of throwback graphics, these raster graphics and so on. That's what it is. It's like it's retro kind of reference, and the fact that they're all the same and there's just these small variations on them is but the ones that are like the supposedly, my understanding of this, I'm not trading these, but like the zombies and the aliens and so on, they trade for more and so on, and so like the more rare the features are, the more they trade for them. So it's pretty amusing to watch this, but I think that this site is interesting. This price floor website, if I can find it again. Yeah, here we go. So you can see that there's only a handful of these that trade for significant amounts of money. There's maybe 8 or 10, like some of these, like Damien Hirst, he's a well-known artist, been around 30 years or so in the art world.
But who created CryptoPunks, and what makes them special over Damien Hirst or any other of those?
Okay, well, it's created by two guys that have a company called Larva Labs, and what's special about them is that they are the very first NFTs. Okay,
Oh,
they were the first. So
okay.
it was more of like, why didn't I buy 10 of these way back when? Is because they were kind of a proof of concept. They were like just a cute idea, and it was the very first. It's like this standard, the Ethereum improvement proposal, whatever it was, 721 was a new standard that launched at the beginning of 2018, and they immediately turned around and launched this, and so it was the very first, and so it's like the first of a kind, is what makes it supposedly valuable. Whereas something like this, Damien Hirst, you can take one of these, you buy one of these NFTs, and you can claim a physical work of art that's in a vault. That is this physical work of art, and then they destroy the NFT, and only the physical work of art would exist. It's signed by the artist and so on.
Are these all the same, or are these all different?
Yeah, they're different. And
Okay.
they're generated by some sort of machine learning algorithm or something like that. And the title is like some machine learning thing. I'm just saying, it's like a little bit gimmicky, but they are different, supposedly. And this artist is known for some of these pointless style paintings and so on. But the idea is that they are exchangeable for physical work of art, if you want to exchange it. And but in any case, there's just but the other type of NFT that there are many applications of NFTs that are not just art. These are that's what the examples are here is art, but there are a set of financial products that are all classified as NFTs, like market maker positions and so on. So you can use this NFT idea pretty broadly. It's not just a art, and so it's a kind of an umbrella category that incorporates a lot of things. It could incorporate, for example, there's a site, the app doesn't exist yet, or the site doesn't exist yet, but it's being created right now by the electronic music artist Blau, and it's called Royal, and you can buy fractional shares of the royalty streams of musical artists, and or you will be able to when that launches. So if there's it could be artists that you like, you want to buy a share of their royalty stream, or you could just name in ones you like. It's just, I think this is a nice portfolio of royalty streams. So all of those would be NFTs. So that actually has, it's a financial product. It's tied to art, but it's a financial product. It's really something that you could consider. I would be terrified at paying, $270,000 for something like this. That's sort of a hype item, right? But for something where there's a royalty stream, and you think, well, what's the life of this album's popularity, and you can do some math and figure it out, and you can have treat it like an investment, right? And so I think that's more my speed than trying to gauge what I think the next hype item will be. I think that's true for most people. Back in June, these Bored Ape Yacht Club, this was all trading at half an ether, and now the floor price is something like 34 ether, and so that's that's about close to $100,000. And this was one that Stephen Curry bought one of these, I don't know, a week or two ago. And he's, already posting in like the Discord community and so on. So it's, there's just this, a huge amount of hype around this right now, around this
So
space.
all of these are still for sale?
All of these are for sale. Yeah. So this is
And how many have been sold? Is there a number?
Oh, there's I think there's something like 10,000 of these, but what you see here, there's 2,000 that you could buy on this platform OpenSea.
Right.
Okay. And so yeah, you could buy these, and this is the list price. You could go on here onto OpenSea and you could say, well, I'll bid X. You don't have to bid this number. You could bid some lower price. And then if they are okay with that price, they'll sell it to you for that. But when these are selling at this price floor, there's no way to get one of these at less than that amount. It's that's the what if you really want one, that's what you have to pay. So it's yeah, well, it's not my thing, but
it really is amazing. We certainly live in very interesting times for sure.
Well, it's I think that actually a similar phenomenon is happening in the physical art market right now. And we can talk about this, like it's just there's just more liquidity here. There's just more price transparency here. When in a lot of recent art auctions, the prices have been much higher than what the suggested or the predicted price was by the auction house. And I think it's so much money chasing too few goods, is the definition of inflation, right? So I think I think we're seeing this across the whole economy: real estate,
sure,
physical art, digital art, crypto, stocks, even. I mean, it's an inflationary phenomenon.
Right.
All of it is. So but the fact is that I think that, let's say there's another bear market down the line, which sure there will be in crypto. A lot of these price, a lot of this stuff will be more or less worthless. I mean, it's one thing for an artist like Damien Hirst, who's well known, to buy something like that. It might hold some value. Maybe something like the CryptoPunks will hold some value because they were first and it's still a status good and so on. But a lot of these others, they, Mutant Apes or, Punk's comic or whatever, Cool Cat, I mean, a lot of these aren't gonna hold much value in that downturn. So that's the what I think the real story is going to be is that a handful will survive and still hold value.
Thank you for this amazing demonstration of human creativity.
It's a little bit of it's outside of, I mean, I'm aware of it, but it's a bit outside of my it's not where I really invest. I'm more interested in thinking of like if I buy a piece of art, then it's because I just want to have it on my wall. I just want to own it, and I'm not looking at it like I'm going to flip this and sell it for. I bought it for 10 Ether. I'm going to sell it for 20. It's like that's just not my thing personally. I'm more comfortable analyzing other things as investments where I don't have any kind of emotional involvement in them.
Yeah.
But in any case, I think that but if I could just hammer home one point, I think it's really worth watching this weekly close in crypto. And I think it would be good for Ether, which is right now sitting right above 3,200. I think it's important for it to close above that level. And I think Bitcoin, if it can get back above, let's say at least its 50-day moving average here, which is currently at 44,940, so not that much below, then that's better. It would be really nice for it to get above the 45,900 level, which is that 200-day moving average. But it's just a little bit more bearish than Ether right now. But I think Ether, this is sitting right there. So.
Yep.
All right.
Well, that's it for me for today.
All right. Thanks, everyone.